Ever met someone who tells you they're having a fantastic day, but their body language is just screaming, "Get me out of here"?
Yeah, I know that feeling.
Well, that's kind of the stock we're dissecting today. It's a company with this glowing report card, but maybe a whole lot of nervous energy under the surface.
Interesting analogy.
Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. We're working with data captured on September 3, 2025, as of 07:40 a.m. ET.
And today we're diving deep into the cloud security giant Zscaler. Your symbol ZS.
Right, ZS.
Our mission, really, is to try and make sense of Zscaler's conflicting signals. We want to uncover that underlying valuation challenge.
See why it's such a puzzle. Okay, let's unpack this, starting with the macro picture.
Sure.
Pre-market futures are certainly painting a rosy picture this morning. Looks quite positive.
Yeah, the tech-heavy NASDAQ is leading what seems like a green open.
Feels like the market's maybe ready for a good day.
Well, yes, but what's fascinating here is the shadow that's kind of being cast by the broader economic news.
Okay, what shadow is that?
We're seeing these warnings, from major institutions about the U.S. economy possibly hitting a stall state.
Stall state. So like growth flatlining, but inflation sticking around.
Exactly. And that puts the odds of a recession in the next 2 years at basically a coin flip, 50%.
Okay. So it's optimism, but cautious optimism.
Very cautious, especially with the Fed's beige book due out today. That could definitely shift the mood.
Right. The beige book always stirs things up. So we're kind of walking on eggshells with the economy, even with this NASDAQ strength.
That's a good way to put it.
How does a company like Zscaler fit into that? Especially when its own news sounds so incredibly strong because, here's where it gets really interesting with ZS itself.
Go on.
They just dropped what everyone's calling a banger of an earnings report.
Yeah, the numbers looks good.
Revenue up a strong 21% year over year. Plus, they're leaning really heavily into this AI narrative, right?
Yeah.
New security tools and acquisition.
Hitting all right notes for the market currently.
And Wall Street seems to love it. 73% of 48 analysts rating it buy or strong buy. And get this, 0 sell ratings now.
0 sells. Wow.
Sounds like a pure win, doesn't it?
It definitely looks like a win on the surface. That's the glowing report card you mentioned.
But there's always a but.
Well, if we connect this to the bigger picture, that strong story, it clashes pretty significantly with our research's fair value analysis.
Okay, how so?
Our models, based on free cash flow and fundamentals, they suggest the stock's intrinsic value is somewhere around $99 a share.
$99? Seriously?
Yep. Around there.
But the market just now was trading at around $280.
Exactly, $280. That's not just a gap, that's what you called it, a canyon.
A canyon, yeah.
Yeah.
Between perception and what the fundamentals might suggest.
It highlights a really stretched valuation. It tells us the market is, perhaps, heavily invested in that AI story and future potential.
Maybe overlooking some risks our models are picking up, like execution or competition.
Could be. That's a massive disparity, whatever the reason.
Wow, okay, so nearly 3 times the modeled value. That's a lot of confidence baked in. Or maybe that nervous energy we talked about.
Could be both.
So given this huge difference, how are investors actually placing their bets? What's the sentiment? What do the charts say?
Well, interestingly, the options market seems to side more with the skeptics.
Oh, how's that?
The put-call ratio is 1.15. That means slightly more bets on the stock falling than rising. A bit of a contrast to those bullish analyst ratings.
Yeah, it is. Any key levels the options market is watching?
Seems like there's a perceived ceiling around the $330 calls and maybe a floor near the $200 puts.
Yeah.
Those are areas with significant open interest.
Okay. And what about short sellers? Are they sniffing around?
They certainly are. About 6.05% of the available shares are sold short. Not extremely high, but it shows there's definite bearish interest.
And technically, what's the chart telling us long term?
Technically, the longer-term trend is actually negative. You see lower highs and lower lows on the chart.
The classic downtrend pattern, despite this recent earnings pop.
Despite the pop, yeah. That underlying structure is still weak. And volume, over the longer term, also shows more money flowing out than in.
Okay, so volume confirms the trend. What about momentum?
Momentum is really conflicted. You've got some short-term indicators flashing a fresh burst, probably from the earnings.
Right.
But other broader measures still showing underlying weakness and volatility, which had been tightening.
Suggesting a big move was coming.
Exactly. It's now increasing again. So the stage is set for a decisive move, but the direction is still pretty unclear based on these mixed signals.
Okay, so summing this up, we have this blockbuster earnings report, battling bearish long-term technicals, some cautious sentiment in the options market, short interest.
Don't forget the fragile macro backdrop.
Right, the macro uncertainty, and that, well, stratospheric valuation compared to fundamentals. It really is a battlefield, isn't it?
It truly is a tug of war.
So what does all this mean for you today, the listener? How do you navigate this? After weighing all this evidence, our final call for Zscaler today is a wait-and-see approach.
Yeah, and this raises an important question, right? Why wait when the earnings were so strong?
Good question.
Because, like you said, it's a battle. Those earnings are a powerful short-term catalyst, no doubt. But they're running headfirst into these deeply ingrained longer-term bearish signals and that valuation concern. It's just too uncertain for immediate call today.
Too many strong forces pulling in opposite directions. Okay, got it. So wait and see it is. Here's your game plan then for key levels to watch if you are watching. The immediate ceiling seems to be that pre-market high, around $283.88.
Okay.
To the downside, maybe watch yesterday's after-hours close around $278.74.
Great.
And below that, the regular session close from yesterday, near $274.57. Those could be initial support areas.
Good levels to keep an eye on.
So for Zscaler, I guess the question today is pretty simple. Can a really great story defy financial gravity when so many other signals are pointing the other way?
That's the core tension.
Today, we get to watch and find out. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice.
Please do your own research or consult with qualified financial advisors before making any investments. Trading stocks involves risk, and you may lose all of your investment.
Thanks for tuning in. Catch you in the next episode.